Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Firstly, today's outlook, we're going to start with the Asian shares. They were mostly mixed on Wednesday as of course we saw the weaker than expected US ISM services data that was lowering the chances that the Federal Reserve will hike rates this month. Also looking at the Japanese Nikkei 225 index, it finished down about 0.5% or 69 points at 17.012 as the yen of course strengthened against the dollar. Looking at the stronger yen is generally seen as negative Japanese stocks as it makes exports more expensive and of course reduces overseas earnings when translated back into the home currency. The dollar-yen pair fell to 101.36 below the 103 level it had held for the past 3 trading sessions. That of course, that move came as the dollar weakened on a lower prospect for an immediate Fed rate hike. Also, without the Fed around to support the heavy lifting in September, that is to raise rates of course, the market is less than convinced that any standard Bank of Japan policy will be effective at this stage. Tracking the European stocks as well also were mixed in the morning trade today on Wednesday as investors digest weaker US data which lowered the chances of the US Federal Reserve hike later this month. The pan-European stock 600 index was hovering around the flat line with a lack of conviction setting into the markets. Major bourses as well and sectors around them were pointing in different directions. Along with that, the euro was quite steady on the day against the dollar at 1.1255. Of course, we saw the Institute of Supply Management's non-manufacturing purchases managers index fell to 51.4 last month, far short of the expectations around in the calendar, and of course, the largest one-month drop since November 2008, giving of course the US Federal Reserve a bit of more reason to delay interest rate hike this month. Gold in the commodity sector rose to a fresh 2.5-week high on Wednesday after giving nearly 2% in the previous session as of course disappointing US economic data reinforced expectations that US Federal Reserve will keep rates on hold at least in September. Tracking the service sector in US and the activity, it slowed also to 6.5-year low in August on a sharp drop in production and orders, pointing to slowing economic growth. That of course further diminishing prospects for near-term interest rate hike. Gold was a bit slightly up 0.2% at 1348.50 an ounce early in European trade as the metal touched a high of 1352.65 in its best since August 19. Gold could of course move in the 1350 and 1360 range with the support at 1345 and resistance at 1365. Oil prices in the energy sector inched lower on Wednesday as market participants remain skeptical that producers will reach an agreement to freeze output to rein in a global supply glut. The West Texas Intermediate crude for October delivery was down about 8 cents at 44.75 after settling up 39 cents on Tuesday. Oil prices hit one-week high on Monday after Russia and Saudi Arabia agreed to cooperate on stabilizing the oil market, but of course also they have since fallen due to the mounting uncertainty over a deal. The Organization of Petroleum Exporting Countries and non-OPEC producers such as Russia will hold informal talks in Algeria on September 26-28, but of course many on the market are skeptical that a deal will happen. That's all of the important news of today. See you next time. Bye-bye.